Hey everyone, welcome back to Stocks Telegraph. If you're new here, hit that subscribe button and ring the bell so you never miss out on our in-depth stock breakdowns. Today, we're diving into a company that's been making waves in the uranium mining sector, Denison Mines Corporation, ticker symbol DNN. With the global shift toward cleaner energy and an increasing demand for uranium, Denison is positioned to take advantage of some pretty exciting trends. But is DNN a stock you should be watching in 2024? What's the outlook for their future growth? Let's break it all down today. So if you're ready to get the latest scoop on Denison Mines, grab your coffee and let's dive in. Now, before we jump into the numbers and all the juicy details about Denison's current performance and future prospects, do us a quick favor. Hit that thumbs up button if you enjoy stock breakdowns like this one. Drop your thoughts in the comments. Do you think Denison Mines has what it takes to capitalize on the growing uranium market? And of course, share this video with your friends or fellow investors who might find this info helpful. All right, let's get started. So let's talk about Denison Mines stock performance first. As of today, the stock is trading at $2.08 per share. But here's the exciting part. Analysts have set a target price of $2.84, which suggests a potential upside of around 36% from its current level. What's even more interesting is that Denison Mines has an analyst recommendation score of 1.09, which is very close to a strong buy. That's a good sign, as it means Wall Street is pretty confident in Denison's future performance. Looking back over the past year, Denison has delivered a 25.30% return, and just in the last month alone, it's up by 7.77%. But even with these solid gains, the stock is still about 15.79% off its 52-week high, so there's still some room for growth. But it's not all sunshine and rainbows. Like any mining company, Denison has its ups and downs, especially when it comes to profitability. Let's dig into that next. When we look at Denison Mines' financials, the company has been performing relatively well, but there are some bumps in the road. For instance, Denison posted a loss of $18.9 million for third quarter 2024, or 2 cents per share. That might raise a few eyebrows, especially for short-term investors looking for immediate returns. However, it's important to keep in mind that Denison is still in a growth phase. With uranium mining, there are often significant upfront costs as companies develop their projects and scale operations. Denison's revenue for third quarter came in at a modest $509,500, with adjusted revenue at $509,000. Now, here's something more exciting. Denison's profit margin is 489.16% on a trailing 12-month basis. That's pretty eye-popping and shows how efficient their operations are when they do generate revenue. And here's another key metric for investors to watch: Denison's earnings per share. Over the next year, analysts are expecting a 38.83% increase in EPS, which would be a nice continuation of the 157.23% growth seen in the TTM period. So even though they've posted a loss recently, the growth trajectory looks promising. Now, let's zoom in on Denison's projects, because this is where things get really exciting. Denison Mines has some major projects in the pipeline that could really fuel their growth in the coming years. The big one to watch is their Phoenix in-situ recovery uranium mining operation. The Phoenix ISR project is one of Denison's flagship developments, and it's been making significant progress. As of third quarter 2024, 45% of the engineering work has been completed. Denison is also pushing ahead with securing funding for the project. They've committed $21 million in milestone payments to get the ball rolling on procurement for Phoenix's capital expenditures. These are substantial investments in the future, and they show Denison's commitment to bringing this project to life. What's even more promising is the regulatory progress. Denison has resolved nearly all the outstanding information requests from the Canadian Nuclear Safety Commission regarding the Wheeler River Draft Environmental Impact Statement. The federal review process is nearly done, and Denison is moving forward with submitting the final provincial EIS to the Saskatchewan Ministry of Environment. Beyond the Phoenix ISR project, Denison is making strides in other areas too. Let's talk about some of the other assets in their portfolio. Denison holds several other key regional assets that are critical to their growth strategy. For example, the McLean North deposit is on track to go into production by 2025. Denison is also progressing on exploration and development at other sites, like the Midwest Project and the Heldeth 2A deposit, both of which could provide further upside potential as the company advances its technical studies. And here's an interesting strategic move. Denison recently made a deal with Foremost Clean Energy, optioning up to 70% of its interests in a portfolio of 10 exploration properties. This deal is designed to amplify Denison's exposure to potential uranium discoveries while still keeping significant ownership of its key development stage projects. Now, let's talk about Denison's financial strength, because this is a big factor in why they're well positioned for the future. Denison is in a strong financial position with over CAD $375 million in cash, physical uranium, and investments. And the best part, they have no debt. That means Denison is able to move forward with its plans without the burden of financial leverage weighing them down. And here's the kicker. Denison's McLean Lake Mill is another key asset. This mill has the capacity to process up to 24 million pounds of uranium annually, which is huge in terms of supporting Denison's current and future projects. What really sets Denison apart, though, is their partnerships with industry giants like Orano and Cameco. These companies are two of the biggest players in the uranium sector, and Denison stands to benefit from their expertise and infrastructure while still maintaining exposure to uranium resource growth. Before we wrap up, let's take a quick look at what analysts are saying about Denison. Recently, National Bank raised its price target for Denison Mines from $2.50 to $2.96. That's an increase of over 18%. They also maintained an outperform rating, indicating that they believe Denison will outperform the broader market. This kind of analyst sentiment is something investors should definitely take into consideration. To wrap it up, Denison Mines Corp has a solid foundation and a clear growth strategy. Despite a loss in third quarter 2024, the company is advancing its key projects, especially the Phoenix ISR uranium operation, which could be a major driver of growth by 2027 or 2028. With a strong balance sheet, no debt, and exciting projects in the works, Denison Mines is well positioned to benefit from the growing global demand for uranium and clean energy. Whether you're a short-term trader or a long-term investor, this stock is one to watch. So what do you think? Is Denison Mines on your radar for 2024? Drop your thoughts in the comments below. Don't forget to like, subscribe, and share this video with your friends or fellow investors. Thanks for watching, and we'll see you in the next video.